Let's start today's video with just a background of what happened with the Dow Jones. Now, last 2 to 3 days, we have been following the Dow Jones go through the different steps of the support and resistance, and we see now, of course, another down day, about 165 points. It's just passing through our lines, and the next stop is going to be 1610, which means that gold has a little bit more way to go. The aftershocks of China are still existent, and they are predicting them to be more as we go along. It's very rare that a trend like this stops midway. For example, we may see 1 or 2 positive days in the Dow, small movements, but probability says that it's going to 16.1. And 16.1 seems to be a very natural, hard support for the Dow Jones. As we can see here, it's been probably about 3 instances where it's bounced off at that price. And I think the market's been waiting for that correction for a long time. Again, if you draw your lines right, you will know the support and resistance, and we can trade with it. And we'll go into the gold, USD, and dust and nugget a little bit later as well, so we can see the effects of what's going on with the Dow Jones. Recapping the dollar as well. Positive day for the dollar. We did have, at least when I last checked last night, the Asia markets were positive. They're rebounding, which means the dollar was going to make somewhat of a comeback. And the Dow Jones was supposed to make a comeback as well. And we can see that it probably did. It opened up here. It got up pretty high. I thought it was going to stay positive, but it just crashed right after that. And you can add in the job numbers as well. The job numbers, as far as the percentage goes, stayed the same. They're saying the salaries went down a little bit, but it just depends on how you see it. We usually don't trade doing job numbers, but we did this time. Going back to the dollar, though, even though it was a positive day, it could have been more, and it should have been more. And the fact that it didn't is it's good news for Nugget, I should say. We see a natural. Let me go ahead and click my inspect button here, but we do see a natural resistance right here. It keeps touching it, and then it just went down. It went back down. This is not a good sign, because it's just saying it's getting up there because of technical traders, but it doesn't have enough fundamental strength behind it to get through. So it got halfway there. It came back down. Moving average looks pretty okay. We have the MACDs above 0, which is just hanging around, and the CCI is the first sign that it's coming back down a little bit. We'll keep an eye on it. We do think gold will be a better option for now. Speaking of which, let's look at gold. Gold was an interesting day today. It actually opened up right where we expected it to open up. It dropped back down right because of the job numbers and the gold China market rebounding. Oil dropped, so people are they're just trying to move their money around to the safest place. Oil is not safe. It keeps dropping. You saw the Dow Jones drop, but it went up a little bit because of decent job numbers, China rebounding, and then just fell right after that. And that was basically the same thing. Opened, it went down because the Dow went up, and then it came back up because Dow ended up being lower. So same thing, like we say it every day, we say with every single chart, the price always comes back to the 8-day average, and what you try to do today as well. Came back low, but it hit our resistance, and it stood there. It could not pass it, and this is a pretty strong resistance and support. We see multiple instances where this has led its shoulders for nice support. So we expect a little bit higher on Monday. Hopefully we can sustain this trend for gold, but knowing that it's the weekend, people are going to reflect, calm down, and hopefully have a positive trading session on Monday. So that could affect it a little bit or not, but hey, the Dow went down and so did gold today. So there's no direct correlation between the two. Although all the signs point to a very nice rise for gold, at least in the short term. Let's head over to dust. Now, dust was pretty interesting today. Of course, after a big day, it always has to come back to the 8-day average, and which it tried to do today. It may try that again later, probably next week, or the 8-day average may drop to meet them halfway. It was a 7% rise. It was up almost 10% throughout the day, so it could have been better, but it just we have our resistance lines down pretty solid. It could not pass it. It touched it, tried to go over, and the traders wouldn't have it. I think this was just a pity bounce, which it usually does after a big fall. And Nugget started off low, but it came back up, and that's the whole story. Even though it was a really big day for dust, it could not hold on to the high gains that it had. The MACD is coming above 100 for Nugget. It's above the 20-day, the 8-day, 50 days coming right in line. This could be another repeat of what we saw in the beginning of December, where both these lines, connected and it jumped up a little bit. So we could probably see a jump up next week. It all depends on what the dollar has to offer. But we are working on new strategies that can now limit our losses when it comes to these times where it's basically flatlining. Now, we don't have any other charts to go over, but I do want to mention something about Apple. It's been in the light in the newsletter for a while now because of its falling stock price. We predicted this way back when we charted the stock. As you can see, it moves very precisely to our support and resistance. We saw a negative cross in the moving averages, which at the same time, when you see a CCI at below 0, you know something bad is happening. And look at the MACD. It has not crossed. Although it's above 0, it's on the way down. The first sign of something going wrong should be your CCI crossing the 100 level going down. So on this day, this is when you should have stepped back and be like, okay, something's going off. The next day would have been your second signal, hey, it's possibly time to get out. And by that time, you could see the MACD at the bottom. It's telling you the same story, hey, something's not right, it's coming back down. And that's basically the job of the CCI. The CCI tells you if it's overbought or oversold. And then if you would have waited for the negative cross, it would have been way too late. You would have already lost money. You should have probably gotten out right here, which is still kind of late anyways. But that would have been your first sign that something's not right. Since then, it has not touched the 100 mark. And when a stock for a long time does not touch the 100 mark, no one is interested in buying this stock. People are either shorting it, or people just don't think it's a viable stock to buy. And that is a great candidate, along with our lines, because it's right at our lines. It has not cleared and it will not clear. Great candidate to short a stock, because a lot of people will trade this one. It's the volume is 70 million, so it's going to be very stable. It will move predictably, and when it moves a lot, it's not going to kill you. As far as moving, 15-20% like Industrial Nugget do. So this could have been a great short candidate. 118 to 98, you're going to make great money. We don't short. That's just a personal philosophy. We like to see everything rise and make money that way. But if you're into that, you can definitely short and make some decent money the opposite way as well. That's it for this video. Until next time.